Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi Dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today we're discussing an important theme that has been circulating in economic commentary regarding Iraq's monetary reform process. The key message is simple but significant. There is no hype, no public build-up, and no dramatic announcements. Instead, reforms appear to be advancing quietly and steadily. Observers point out that when the Central Bank of Iraq previously adjusted the exchange rate, Governor Ali Alak indicated that the change was effective immediately. The expectation expressed in current discussions is that if any future adjustment occurs, it could follow a similar pattern implemented directly, without prolonged speculation or ceremonial rollout. To understand what this means for Iraqi Dinar followers, we need to separate emotion from economic structure. Monetary reform in Iraq is not a social media event. It is a technical process overseen by the central bank, influenced by fiscal coordination with the government, and aligned with macroeconomic realities. Historically, when the Central Bank of Iraq, under figures such as Ali Alak, has made policy adjustments, those decisions have been rooted in liquidity management, inflation control, and currency stability. They were not preceded by widespread promotional campaigns. They were administrative actions implemented through official channels. When the exchange rate adjustment took place in late 2020, the central bank recalibrated the dinar's official rate as part of broader fiscal reforms. That move was announced formally and applied immediately across the banking system. There was no countdown, no staged rollout, and no speculative preview. It was a policy decision executed with immediacy. That historical example is important because it sets a precedent for how exchange rate policy is handled in Iraq. Monetary authorities typically operate quietly until the moment of execution. The current narrative suggests that monetary reform measures have been advancing behind the scenes. In reality, most monetary reform work is incremental. It involves strengthening foreign reserves, improving compliance with international banking standards, modernizing payment systems, tightening anti-money laundering frameworks, and enhancing transparency in currency auctions. These reforms are technical and often invisible to the public, but they are essential prerequisites for any currency stability strategy. For Iraqi Dinar followers, the key takeaway is not the promise of sudden windfalls. The key takeaway is the recognition that serious monetary reform does not require hype. In fact, central banks prefer stability and predictability. Excessive speculation can destabilize markets, create arbitrage pressures, and increase volatility. Silence from authorities often reflects prudence rather than inactivity. If reforms are indeed progressing steadily, as suggested, what might that imply in the short term? In the short term, the impact would likely be seen in improved market confidence rather than dramatic exchange rate swings. Investors and businesses operating within Iraq watch indicators such as foreign reserve levels, inflation rates, oil revenue stability, and government spending discipline. If these metrics remain strong, confidence in the dinar gradually improves. Short-term implications could include reduced parallel market pressure if supply and demand are better balanced. Iraq has historically faced challenges with exchange rate gaps between the official rate and the street rate. Administrative tightening, improved dollar supply management, and compliance oversight can narrow those gaps. That is a measurable sign of reform effectiveness. However, short-term expectations must remain realistic. Currency policy adjustments are often aimed at stabilization rather than appreciation. Central banks prioritize economic balance. A sudden dramatic currency movement could disrupt trade, government budgeting, and banking liquidity. Therefore, if any exchange rate adjustment occurs, it would likely be carefully calibrated. Now let's look at the longer-term perspective. Long-term monetary reform in Iraq involves diversification beyond oil revenues. Oil remains the backbone of Iraq's fiscal capacity. As long as oil exports dominate state income, the dinar's strength remains indirectly linked to global energy markets. Sustainable currency stability requires broader economic productivity, private sector expansion, foreign direct investment, and financial system modernization. Quiet reforms may signal that Iraq is strengthening its financial architecture in alignment with international standards. That includes digital payment expansion, banking sector restructuring, and efforts to integrate more deeply into global financial networks. These developments, while not dramatic, create foundational strength for the currency over time. It is also important to understand how central bank communication works. Institutions such as the Central Bank of Iraq operate with deliberate language. When Governor Alak previously stated that an exchange rate change was effective immediately, it underscored a principle: policy decisions are implemented decisively once finalized. There is no extended pre-announcement because that could create speculative distortions. Currency traders might attempt to run the move. Businesses might delay transactions. That uncertainty could harm stability. Therefore, the idea that we're just going to see it happen reflects how central banks function globally. They act once internal consensus and readiness are achieved. This does not guarantee imminent change. It simply explains the operational style. For dinar followers watching from outside Iraq, patience and grounded analysis are essential. Monitoring official statements, reserve data, inflation reports, and fiscal coordination provides more insight than rumors. The central bank's published reports, government budget implementation, and IMF consultations are stronger indicators than speculation. In assessing whether reforms are emerging quietly, one must examine measurable signals. Are foreign currency reserves stable or increasing? Are compliance reforms reducing illicit financial flows? Is the government controlling public sector wage burdens? Are infrastructure and private sector reforms progressing? These are the real markers of sustainable currency development. Short-term currency value is influenced by liquidity management and confidence. Long-term currency value is influenced by productivity and macroeconomic discipline. Quiet reform can support both, but only if it is comprehensive and consistent. Another important point is that monetary reform does not necessarily mean redenomination or sudden revaluation. In many countries, reform simply means modernization and stabilization. For Iraq, reform may include improving electronic payment penetration, reducing cash dependency, and encouraging domestic banking participation. These initiatives strengthen transparency and reduce pressure on currency auctions. From a risk perspective, it is crucial not to interpret silence as confirmation of a specific timeline. Central bank operations are influenced by regional geopolitics, oil price volatility, fiscal policy execution, and global monetary conditions. External shocks, such as shifts in U.S. Federal Reserve policy or fluctuations in oil demand, can impact Iraq's monetary flexibility. At the same time, Iraq has made measurable progress over recent years. Foreign reserves have historically remained relatively robust compared to crisis periods in the past decade. The government has also demonstrated improved coordination between fiscal and monetary authorities. These structural improvements contribute to resilience. For viewers following the Iraqi Dinar, the balanced approach is to recognize progress without assuming dramatic overnight outcomes. If exchange rate policy is adjusted again in the future, it would likely be framed as a macroeconomic necessity rather than a speculative event, and as before, it would likely be implemented immediately upon announcement, not teased in advance. The phrase "no fanfare, no hype, just bottom line" aligns with how mature financial institutions operate. Stability thrives in predictability and disciplined execution. Markets reward consistency more than surprise. In practical terms, what should IQD followers focus on now? Focus on official economic data releases. Focus on government budget implementation and oil revenue management. Focus on compliance reforms and banking modernization. These are the building blocks of currency strength. In the short term, expect steady administrative measures aimed at narrowing exchange gaps and maintaining liquidity balance. In the long term, watch for diversification efforts and financial system reforms that can gradually enhance investor confidence in Iraq's economy. It is also worth emphasizing that currency reform is only one piece of a broader economic transformation. Infrastructure development, private sector empowerment, anti-corruption measures, and regional trade partnerships all play a role in shaping economic stability. The dinar reflects the health of the entire system. So while some observers suggest that results are quietly emerging, the responsible analytical position is to look for tangible evidence. Quiet reform can be positive. Quiet reform can mean institutional maturity, but it must be measured by data, not anticipation. As always, responsible financial analysis avoids guarantees. No currency move is certain. No timeline is guaranteed. Monetary policy decisions are complex and contingent on evolving conditions. Staying informed through credible sources is the best strategy. If history is any guide, any significant exchange rate action would be clearly documented by official channels and implemented immediately upon decision. Until then, steady reform indicators are the most meaningful signs of progress. Thank you for watching today's update. If you value factual, balanced, and responsible analysis of Iraqi dinar developments, make sure to subscribe and like the video so you never miss an update. And remember, this content is provided for informational purposes only and is not financial advice. Always conduct your own research and consult a qualified financial professional before making any investment decisions.